what a crazy time in crypto. This is going to be a long period of time, or a very hectic period of time, I would like to say, for the crypto space as another deleveraging happens. And I wanted to cover this in a little bit more detail in how I see things potentially playing out, but also what has currently happened, right, with Sam Bankman-Fried, with FTX, with Alameda, and Binance, and how this is all going to play out in the future. We also have some breaking news too with Tron and USDD, the stable coin, that we're going to get into, because Alameda has exposure to USDD, which is Tron's stablecoin, which is another network. And as of this morning, or as of late last night, Tron's stablecoin USDD has lost its peg and has not returned yet. This is going to be an interesting time in crypto, and we will play this out. So I'm going to try to get into this. Appreciate you guys. If you are here for the first time, what's good? My name is Sam. If you're here returning, it's good to freaking see you. If you would like to support the channel, you can check out some links down below. You can follow along on the social media stuff right here. Now, without further ado, let's get into it. So the thing that started all of this came out. This is CoinDesk, right? And this came out on it was updated yesterday, yes, but it came out on the 2nd. So I just want to go through on this really quickly and then give thoughts as we go through this before we get into some Twitter stuff and before we get into some other stuff. If you guys have other information or thoughts or questions, leave them in the comments, and in a few minutes we'll get into that. Division in Sam Bankman-Fried's crypto empire blur his trading titan Alameda's balance sheet. So this is a starting point, but it gets so much juicier as we get into this. Alameda has 14.6 billion of assets as of June 30th, according to a private document CoinDesk reviewed. Much of it is the FTT token issued by FTX, another banking company. By the way, just for context here, let me pull this up. I said this in video, I think yesterday or 2 days ago, with GRC at the 11 o'clock show, where FTT was trading at around $4 or $5, and I said this is going to go down. It is currently trading at $2.79. Somebody can clip this, and the FTT token, I personally believe, is going to zero over as the rest of the news comes out here. When you understand, or just have the history, I believe that the FTT token is going to be going to zero. Today's 11/10/22, and I think that from $3, even though I called it at $22, I think this is going to go down substantially further, because this is a big hedge fund. For reference, Three Arrows Capital, which helped facilitate the bankruptcy of a lot of different trading firms, or a lot of different leverage firms in crypto, as well as Terra Luna, was around $3 or $4 billion. This is like 3 to 4x that size of this. Billionaire Sam Bankman-Fried cryptocurrency empire is officially broken into two main parts: his exchange and Alameda Research, which, by the way, Alameda Research website is down. They took down their website so that you can't go to their website, right? Fishy? Yes, of course. And Alameda Research is trading firm, both giants in respective industries. But even though they are there's a little bit of a hurricane going on here in Florida. So if the power goes out, that's why. But even though they are two separate businesses, the division breaks down in a key place. On Alameda's balance sheet, according to private financial document reviewed by CoinDesk, it is conceivable the document represents just part of Alameda. That balance sheet is full of FTX, specifically the FTT token issued by the exchange that grants holders a discount on trading fees on its marketplace. While there is nothing per se untold or wrong about that, it shows Bankman, trading giant Alameda, rests on a foundation largely made up of a coin that a sister company invented, not an independent asset like fiat or another crypto. The situation adds to evidence that lies between FTX and Alameda are unusually close, which we're going to get into one of their transactions. And I personally believe it's illegal, which we're going to get into in a few moments. The financials make concrete and what industry watchers already suspect. Alameda is big. As of June 30th, the company's assets are $14.6 billion. Its biggest asset, $3.66 billion, unlocked FTT, because I think you have to have it for vesting period or something. So $3.6 billion, right? The third largest entry on the asset side of according to the ledger. A $2.16 billion pile of FTT. Wow. There are more FTX tokens among its 8 billion liabilities, 2.96 million of locked FTT. The liabilities are dominated by 7.4 billion of loans. Think about that. Oh, fuck. They are destroyed. Oh, man. I actually haven't read through this article, but holy, they are effed. So think about this. Let's read through this last couple sentences. Yeah. As of June 30th, the company's assets amounted to 14.6 billion. Its single biggest asset, 3.66 billion of unlocked FTT, the third largest entry on the asset side of the accounting ledger. The $2.6 billion pile of FTT collateral. So I'm not sure fully understand how this looked because they didn't print the document. They didn't share the document, at least so far. But how leverage works is you own an asset and you take debt out against that asset. So in fiat, that's very common. If you own a house, you leverage more than likely with a mortgage, right? I have a mortgage against my house. I'm using leverage in this case. In the crypto space, in the house case, right? Let's take this for example, because it'll give you a better context of why this is so incredibly dangerous in crypto. In the case of my house, if my house goes from, say, $375,000 down to $250,000, and my loan is for $300,000, then nothing happens. I just continue paying the bill, right? But in financial assets, and specifically in crypto, if the price of the underlying, in the case of this example, the house drops from 375 down to 299, then I need to, and it might even be higher than that, it might be like 310, right? If it comes down to 310, then I need to supply more capital. Now, in order to supply more capital, I need to put new capital in the bag, or I need to sell some assets to provide the capital, right? And to understand crypto, you look at history and you see that crypto has these 90% fluctuations in the value. So if somebody wanted to use crypto and use leverage, and if you understand the history of crypto, then you would know that you can only use 10% leverage, because these 90% aberrations in price from $100 down to $10 will liquidate anybody that's using debt, unless you're using fiat debt into crypto, right? Because that blurs the line, so to speak, in the sense that you have different rule sets from using it in fiat into crypto, right? Depending on how you structure things. So they have $14.6 billion, and they have down here, there are more FTX tokens among its $8 billion of liabilities, right? So this is, liabilities are denominated by loans. Okay, here we go. So the loans here, Remember how I just said that you could probably use leverage safely if you only took out 10%, meaning if you have $1 million worth of crypto, the most you can probably take out safely, and I'm not advocating you do this, would be, if you look at history with the 90% drops, would be $100,000, right? 10% of the $1 million. So the most you could use would be 10% safely. And that's assuming you understand the risks of this, right? Because if you use 10% leverage and it goes from $100 down to $90, I'm sorry, it goes $100 down to $10. That's not going to happen like this unless you're Terra Luna or the FTX token. But normally, to go from the peak down 90% takes months and months to happen. So if somebody was to use leverage, they would adjust their position to reduce their leverage as this happens. But in this case, as of June, they had 50% leverage. This is extremely, extremely, extremely dangerous in crypto, because you have not only large amount of leverage, but you have volatility squared. What do I mean by that? Well, remember how I said you can get liquidated, right? In financial instruments, if you use leverage and the price of the collateral drops, say the house, in this case, house drops below what the loan is, your thing is called and your position is liquidated. If you don't put up more capital within like 5 hours or something like that, or it might be automatic depending on how it's structured. Now, in this case here, they've got $14 billion. They're using 50% leverage here. And the reason you have volatility squared is because you have the collateral side that's volatile, and then you have the asset side that is volatile. This is like juggling, like flame throwing, bombs that are just like ticking time bombs. They're just waiting to go off because you have volatility squared. I've made other videos on this. You can check out on the channel. This is like extremely dangerous, something that I personally would never do. It's fascinating to see that the majority of the net equity in the Alameda business is actually FTX's own centrally controlled and printed out of thin air token. Corey Klippsten, CEO of investment platform Swan Bitcoin, who is known for his critical views of altcoins, which refers to cryptocurrencies other than Bitcoin. Alameda CEO Caroline Ellison declined to comment. FTX didn't respond to request either. Other significant assets on the balance sheet include $3.37 billion of crypto held in large amounts of Solana blockchain's native token, 292 million of unlocked Solana, 863 million of locked Solana, and 41 million of Solana collateral. That's what you're taking the debt against. Sam Bankman was an early investor in Solana. Other tokens mentioned by name are SRM, which I'm not sure, the token from a decentralized exchange Bankman co-founded, MAPS, Oxy, and FIDA. There is also 134 million of cash equivalents and 2 billion investment in equity securities, right? So that might be like things along the lines of Robinhood and whatnot. Also, token values may be low. In a footnote, Alameda says locked tokens conservatively treated at 50% of fair value, marked to FTX USD order book, which just means that, like, if something is locked and it needs to be liquidated, there's not a lot of options there. It has to be an OTC type of transaction, which means you have to pay a substantial discount. And I think that 50% is not even slightly conservative. I think that's an aggressive number, that you would actually lose a lot more. Owners of the FTT token get discounts on trading fees, increase commissions on referrals, and earn rewards. The value of FTT is maintained by FTX's rolling program of buying back and burning tokens, a process that eats up a third of the exchange's trading commissions. which will continue until half of all the tokens are burned, according to FTX. So that's where we were at. And then that was on the 2nd. Now let's jump forward to the 8th. Right, so there's lots of news coming out around that. This happened on the 8th. So this was 2 days ago at 11 a.m. This afternoon, FTX asked for our help. There is a significant liquidity crunch. This is 6 days later, because as soon as that happened, I don't have the resource anymore, but as soon as this happened, there was a mass exodus of liquidity. If you know that a house is burning down and you have money in that house, or you're in that house, you're probably going to leave. And that is exactly the case with Alameda, and that is exactly the case with FTX. If you know that the house is going to burn down, you're probably going to leave until the exchange locks the doors and forces you to stay inside of a burning house, right? To protect users, we signed a non-binding LOI, which is a letter of intent, intending to fully acquire FTX.com to help cover liquidity crunch. We will be conducting a full DD in the coming days. DD is due diligence, right? So let's read a bit more on this here. There is a lot to cover and take some time. This is a highly dynamic situation, and we are assessing the situation in real time. Binance has the discretion to pull out of the deal at any time. We expect FTT to be highly volatile in the coming days or weeks, right? So that was on the 8th, right? And then on the 8th at 6 p.m., we got this information, right? So by the way, DD is due diligence. So if you are going through and acquiring something, whatever that might be, you do due diligence. That's just research. You got to understand what it is you're purchasing, right? So this is from Lucas on Twitter. And this shows you some of the improprieties that were taking place. And remember, if this is available like on chain, you have to like understand how rotten the situation is. If this is available on chain, this is what people can see, right? So think about this, like there's lights are flickering, so power might go out. The saying that like what you do in private has to be like allow you, whatever you do in private can be like exposed in public, and what you do in private is like an amplification of what you do in public, or some saying along those lines. Well, if FTX and Alameda are doing this publicly, then you know behind the scenes it is like a cesspool of disgusting improprieties. So I found evidence that FTX might have provided a massive bailout for Alameda in Q2. Do you remember what happened in Q2? That was Three Arrows Capital, the other hedge fund that collapsed, which now came back to haunt them. 40 days ago, 173 million FTT tokens worth 4 billion USD came active on chain. Rabbit hole appeared. Well, also, I don't think I pulled it up here. I don't think I did, but Sam Bankman actually mentioned a month or 2 months ago that he's activating some accounts that have not been active. This is perfectly normal routine, right? And this, I don't know if this corresponds to this exact date here, but this goes on. That day, September 28th, over 8.6 billion USD of FTT was moved on chain. That day was by far the largest daily move of FTT in the token's existence, and one of the largest ERC20 day moves we ever recorded at Coinmetrics. I went through all the transfers that happened that day using CM Atlas and ranked them. I found a peculiar transaction that interacted with the contract from the FTT ICO. So this is like the public. This is like the IPO, right? This is the launch of the project. This 2019 contract automatically released 173 million FTT from the token's ICO. The recipient of this 4.2 billion USD worth of FTT token was no one but Alameda Research. So what? Alameda and FTX were intrinsically connected from day one, and Alameda obviously participated in the FTX ICO. But what happened next was interesting. I don't know if you guys can hear this, the rain and the wind outside, but we're kind of like going through a hurricane right now. Alameda then sent that entire balance to the address of the deployer creator of the FTT ERC20, which is controlled by someone at FTX. In other words, Alameda auto-invested $4.2 billion worth of FTT just to send it immediately back to FTX. Here's what I think happened. Alameda blew up in Q2 along with Three Arrows Capital, which we talked about. It only survived because it was able to secure funding from FTX using as collateral the 173 FTT that was guaranteed to vest 4 months later. Once vested, all tokens were sent back as repayment. Remember, the FTT ICO contract vests automatically. Had FTX let Alameda implode in May, their collapse would have ensured the subsequent liquidation of all FTT tokens vested in September. It would have been terrible for FTX, so they had to find a way to avoid the scenario. The timing makes sense. Alameda and FTX essentially put all chips on the table in Q2 and used that to cash and bail others out. This solidified FTX's image, because the PR, as a solvent and responsible institution, which helped FTT's price. So did SPF's political views, right? Because he's very liberal. The Alameda bailout likely put a dent on FTX's balance sheet to the point where it was no longer salient. This would have been fine if the price of FTT didn't collapse and a bank run ensue. This is why Alameda tried their best to protect FTT price. Here's where I think it gets crazier. There's a chance, this is hilarious to me, because this is going to be such a monumental destruction of leverage here. And it's going to happen relatively quickly, like over a short period of time here. There's a chance the folks from Binance knew about this arrangement. Oh, so this is Binance is purchasing them, right? This is 6 hours later after CZ says we're going to buy them. Binance knew about this arrangement between FTX and Alameda. An opportunity emerged. As large holders of FTT, they could start deliberately tanking that market to force FTX to face a liquidation crunch. So remember how I said that it was volatility squared? If you have a volatile asset as collateral and you have the potential where the collateral is volatile and the thing that it borrowed is also volatile, because then you have this thing that's on steroids that makes it even more dangerous. And that's effectively what was taking place. Lo and behold, Binance comes to FTX's rescue. Did CZ just walk out with one of the largest competitors at the expense of a relatively large FTT bag he was going to unwind? True, huge if true. That is not the case, which we'll get into in a moment. Important to note that this is my own personal, highly speculative take on what this is correct. What happened based on-chain artifacts. A lot more is likely to come out in the following days. Evidence that supports this hypothesis keeps coming out. FTX US President Brett Harrison stepped down a day before September 28th transfer. Wow, that's interesting. Maybe he wasn't on board with the transaction that looked like outright fraud. Yes. Okay, that's super interesting because this wasn't here the other day when I updated this. Voyager had 4.6 billion FTT and 63 million SRM. If you remember to the beginning of the video where we were looking at CoinDesk's article, they had the most FTT, and then they also had SRM on their balance sheet. That's Alameda. Just like Alameda, SBF might have had no option but to bail them out. So how that would work is if I'm using FTT as collateral to borrow against that, then what happens if you have a bunch of FTT and you are going bankrupt and you need to liquidate your position to gain cash? Well, if you dump, remember, there's barely, I'll pull it up right now on my other screen here. There is barely any liquidity for FTT. So this is on chain here. So we have 5,000 in the wrapped ETH pair. We have 270 and 227. So there's $550-ish thousand of FTT token. Like, okay, here's another one I found here, 63,000. So there's about 300 grand of FTT on Ethereum, I'm sorry, 600 grand of liquidity. That at the time, this was trading at a lot higher price, but let's think about this. So 4.6 million times, say 22, that's $100 million of, at the time, $100 million roughly of FTT value. And the liquidity obviously is lower today than it was, it was closer, it was like 1.3 million, 1.4 million several days ago. So if that was the case, right? Like I have FTT that I borrow, I use as collateral to borrow against. You are going bankrupt and you have FTT and you need to dump that to get cash to hopefully save yourself. Well, I have an incentive to help you out because if you dump FTT, I'm fucked. And that's exactly the case here. And it's exactly what they did when they went through and they bought Voyager. SPF tried to contain any FUD, saying the transfer was rotating a few wallets. Yes, this is what I was talking about at the beginning. I didn't realize you added this here. Rotating a few wallets and that they do this periodically. Both are lies. The FTT transfer was within 2 entries, not rotation. I wouldn't call the largest FTT transfer ever periodical. Wow. So this is from hype.eth. Wow. So this is what SPF said. Let's click on this real quick and just see. This is from September 28th. This is the one I was talking about. Wow. So this is what SPF said so that nobody would panic while they did the on-chain transfers of FTT for Alameda to take a loan from FTX. Literally fraud. Heads up, rotating this is what I was talking about. Heads up, rotating a few FTX wallets today, mostly non-circulating. We do this periodically. Might be a few more coming. Won't have any effect. Wow, this is literally going to be what helps put this dude in jail. Although he is in the pocket with a lot of senators, right? And so if he doesn't go to jail, that's probably why, because he's paying them off, right? But let's move on to yesterday, right? There's a note that SPF or Binance also put out, but we're not going to get into that. This is what happened as of yesterday, 4 p.m. EST time. Binance's Twitter, as a result of corporate due diligence, as well as the latest news reports regarding mishandling of customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX. In the beginning, our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help. Every time a major player in an industry fails, retail consumers will suffer. We have seen over the last several years that crypto ecosystem is becoming more resilient, and we believe in time that outliers that misuse users' funds will be weeded out by the free market. As regulatory frameworks we are developed, and as regulatory frameworks are developed, and as the industry continues to evolve towards greater decentralization, the ecosystem will grow stronger. Yes. So this is as of yesterday. I highly believe that the FTT token will go to 0 from here. Now, there's a lot of pieces to this that are still going to get exposed. There are all the other assets on their balance sheet. So let's talk about this briefly before I jump on here. Alameda was a giant hedge fund, especially even compare it to just in general, like in normal hedge funds in equity markets, like stocks and stuff. It was a big hedge fund. But in the crypto space, it was a behemoth. The Three Arrows Capital, which caused Voyager and several other firms like that to go bankrupt, was only 3 or 4 billion. This is 3 to 4x that price. And markets are down 90%. And that means liquidity is much, much lower. So as they go through and try to save themselves and steal money, right? What they're effectively doing, or did the other day, I don't know if it's taking place, is the house is burning down and they close the doors with all the customers inside. So the customers can get burned and they can try to save themselves. But if they try to liquidate anything, if they go through and try to liquidate positions at Alameda to shore up some cash, right, to help save them a little bit, what is that going to do? Well, that's going to drive down prices. It's going to continue to drive down prices. They're probably, if I was on the team, I would tell SBF to shut the fuck up, stop tweeting. Everybody else on the team, stop tweeting, and retain the best bankruptcy and lawyers I could possibly find, as well as lawyers for different law, because they're gonna get a massive shit ton of litigation thrown their way, both SBF, Alameda, and Sam Bankman, and potentially the executives at that the company. The dude who quit FTX right before Sam Bankman did this is not necessarily out of this, like litigation free. I wouldn't be surprised if Sam Bankman goes to jail. Also, I wouldn't be surprised if he doesn't go to jail because he's friends with senators. We don't want this corruption to go through and continue. As I mentioned earlier, US, I'm looking at it right now, USDD, the stablecoin for Tron, is down. It has lost its peg. Will it continue to trend down? I don't know. But Tron stablecoin, this is from Cointelegraph, and I think they did research on these things. Tron stablecoin USDC loses dollar peg on suspected sell-off but amid a research. While it's associated with the Sam Bankman-Fried research, could be behind the dollar depeg, alleges Tron's founder. And then when you go to SBF, I'll share this real quick. You go to SBF's Twitter, which we'll pull up right now. So that was from an article, right? But this is on SBF's Twitter, right? Who's Justin Sun? He is the founder of Tron, which is big in Asia, Korea. Further to my announcement to stand behind all Tron tokens, TRX, BTT, all these, right? Holders on FTX are putting together a solution together for, bro, you don't need to put that there. Well, he was probably stressed out with FTX to initiate a pathway forward, right? He's probably trying to, SBF is just like, I'm fucked, and trying to do whatever he can to survive because this is out. So when this kind of thing goes out, everybody, right? This is like the saying, you can always tell who is wearing their clothes when the tide goes out, right? Because then you're left and see who is naked, right? In April 2022, the Tron network launched its USDD, a token pegged to the United States dollar as a over-collateralized stablecoin, meaning it is likelihood of slipping below $1 could be lower due to excessive reserves backing its. That doesn't make sense. Meaning its likelihood of a slippage below $1 to be lower due to excessive reserves. So basically, they're trying to say it's over collateralized, right? But it depends on what you use as collateral. If you used FTT as collateral, you're effed. USDD stablecoin slips below $1, but it was not enough to keep the USDC price anchored to $1 on November 8th, which was 2 days ago. Okay, so this is, I can pull up the chart on this, but if you look at the chart for the stablecoin as of October 2022, October 18th, 2022, the USDC has been sitting below the peg. And just in the last, since the 8th, it has drastically dropped. So let me just share this real quick so you guys get to see the chart that I'm actually looking at here, and then we'll get back into this coin telegram here. So this is the chart here for USDC relative to USDD, right? So let's zoom this out a little bit. So you get to see right here, this is the dollar peg. It's hard to see, but on the right-hand side, it says $1, like over here, right? This is the dollar mark. And as of the 18th of October, we saw it drop down. And it was kind of sitting here at the 99-cent mark for a while, which has happened or can happen with stablecoins. And then right around this time here, which was the 8th, it started to tank. And it's been down here, and it's also been continuing down. So this is what the articles in regards to, and what SBF is actually talking about here. So let's get back into this. It's pegged to but it was not enough to keep the peg on November 8th when some whales dumped over 11 million USDD tokens to seek exposure to rival stablecoins Tether and USDC. A day later, the USDD price fell to as low as 96 cents, followed by a modest recovery to 98 cents. Still down, bro. The selling pressure was visible more broadly in the USDD liquidity pool on Curve's decentralized finance protocol. I just did a video on Curve if you guys want to check that out on the channel. As of November 10th, the pool was heavily imbalanced, holding nearly 82% in USDD and the rest in USDT and USDC and DAI stablecoins. Tron founder Justin Sun speculates that in later research, a crypto hedge fund headed by Sam Bankman could be the whale dumping its USDD. Oh, that's interesting. So Justin Sun has 3.4 million, and this is, I'm reading his tweet here. I think probably Alameda just sold their USDD to cover the liquidity of FTX exchange. The pool currently is back with a healthy rate. So and then he shares a screenshot. That's from Justin Sun. Jumps, okay, 56. Alameda's balance sheet reportedly was 50% FTX token, falling more than 90%. Miscalculated collateral reserves. USDD is issued by Tron DAO Reserve, which also serves as a custodian of its collateral. TBR is primarily responsible for selling the collateral to maintain USDD peg in the event of a sell-side shock. In theory, USDD appears sufficiently backed by 2 billion pool of crypto collateral in the form of Bitcoin, Tron, and USDC, with the reserves reportedly outweighing the stablecoin supply by 283%. Potentially, right? There's a catch. Currently, almost all the stablecoin collateral worth in TDR's reserve wallets are staked and earning yield in Just Lend, the largest lending protocol in the Tron ecosystem by TLV. Meanwhile, 99% of TXR collateral is locked inside of a staking governance contract. TDR also appears to be incorrect, including burned TRX worth of 725 million. Overall, that leaves the DAO with about 600 million worth of USDC and 230 million of BTC in its liquefied reserves. In other words, an almost 13%, 130% collateral ratio versus 283. So what that means is they have, say you have a house that's worth $500,000. You have a loan against that house of $175,000. And that means you're at you're around 250% over collateralized, right? There's more equity in the house than you owe by about 250%. But of that equity, what if I was a contractor and did work for you that you didn't pay me, so I put a lien on your property, and that lien was for $125,000, right? So now you have $125,000 plus $175,000, and you're at what? 400, right? Or 200, 300. So you're at a lot higher amount of actual debt in your property. And then what if you took the remaining amount and you had a HELOC and you had borrowed the money for the HELOC to invest into another property? Well, then you're left with, say if that was $100,000 or say $75,000, you're left with $25,000 of reserve there into the over collateralization on the loans there. That's kind of how you can think about this. Most of the money that is collateralized for this is locked up in smart contracts. So it's with good reason that the USDD is losing its peg. USDD collateral ratio could fluctuate further as its reserve assets, BTC and TRX, undergo price declines. Notably, BTC's price has plunged by more than 22% week to date to around 16.5. So what I said about don't use leverage in crypto unless you're coming from fiat. So this 236 million could potentially be down 22%, right? So that this ratio is actually below 100%. Led by the Alameda fiasco. On the other hand, TRX wiped approximately 12% of its valuation in the same period, trading at 5 cents on November 10th, right? So was that part of their other TRX's worth? Okay, so their TRX lost 12%, right? So this money here is down 12%. Oh man, this is going to be a crazy time with crypto. This is down by say 10%, right? 10%, 60 million bucks. This 236 million of BTC is down by 20%, right? So $46 million, $47 million. Fuck. USDD could be going under. This is interesting. Very, very interesting. We're going to check the chat in just a second. The Tron token now eyes a break below its support, long-standing support confluence, comprising its 200-week exponential moving average near 0.05 cents. And it's Fibonacci, it's garbage numbers, right? Okay. This may push TRX in an extended decline towards 2 cents range. This area was instrumental in the construction channel from 2020 to 2021. Furthermore, it is served, I don't know if there's a lot more valuable stuff than other than talking about. As the same time, BTC is entering the breakdown phase of its prevailing inverse cup. Okay, so they're just talking about garbage, like in terms of TA stuff here. Let me take this down. Effectively, this Alameda could cause the USDD to unpeg by contagion. So contagion, think of like all the idiots in the media over the last 36 months around the contagion, around like stupidness here, right? And then coming out in terms of what they said and what they wrote on paper in terms of quote news, right? Well, in financial assets, the same thing happens. As soon as uncertainty increases, and uncertainty is risk, the people are going to flee to things where they're perceived to be safer, right? So that perception, right? USDC and Tether might be the things of like the gold standard to go to in the crypto space, especially when you consider the collateralization behind something like this. Because if you're using your own asset to collateralize a stable coin that you created, like it's kind of similar to FTT using their FTT token as collateral for their hedge fund and then giving them a loan on that collateral that they created, right? It's a similar story here. I personally wouldn't be surprised if the USDD token completely collapses. That would be detrimental to Tron, and probably would cause a lot of very bad publicity. But when you consider how big Omid is, $14 billion worth of crypto, and if they're trying to liquidate things, and remember, these hedge fund is supposedly sophisticated investors, right? So they're going to want to protect themselves, and they don't give a F about you or anybody else. So they're going to want to try to pull their money or do things to protect their money, which could mean this causes BTC to get down to that $12,000 to $13,000 mark, and Ethereum maybe that $600 or $700 mark, which causes that collateral that is behind the USDD to be way undervalued, as well as the TRX token that is collateral. That could also substantially tank this. I didn't realize I've been on here for so long. There's a lot of people in the chat here. I'm just going to say hi quick, and then I actually have to go to the gym. Them. Good morning. Jack, hello. How are you? BC in the Matrix. Hello. Almighty Hexagon. Damn early in the morning. Yes. Alien. Let's go. We call this Sunrise with Sam. Dude, I'm baffled. All this happened this fast. I knew it would. Damn. I know, right? Morning. Steven, they made a coin out of thin air and leveraged billions of it. SPF was only a billionaire on paper. Dude, that dude, I think, should be probably, when things are going to come out, I wouldn't be surprised if he goes to jail. No risk, no story. I like your logo, bro. What do you think about USDT FUD? I didn't get into that, but maybe tomorrow I can touch on that. Is Solana a good buy or is it dead? I personally would say that I would wait on Solana, or if you are bullish, I don't know enough about Solana, so I can't give, actual thoughts on this other than from afar. But if you're bullish on Solana and you understand Solana, which I don't claim to say that I do, I would think about a much longer term strategy where these events where you have liquidations and craziness and all this shit happening. Think of like Solana, if that's your thing, if you like Solana, think of it as more of like a long-term play, like dollar cost average into it. Like every week you get paid, put in another $50 into it for like 2, 3, 4 years type of thing, right? And continue to learn and educate yourself about the Solana, like whatever's happening there, token. Love SS in the morning, GRC show. Mama, thank you. I appreciate the support. Michelle, good morning. We now bad actors in crypto. Yes. Rope Dog. Chad in the house. Good to see you. The sincere adventure of journal. Is crypto done? No, this is just the beginning. Crypto will never go away, in my opinion. Crypto will kill fiat, though. Mason, and everyone's worried about Mt. Cox Bitcoin. Right, it's true. CPI numbers come out on Thursday, sir. CPI numbers come out on Thursday, I think. Good morning, Patrice. Good morning. I have to go to the gym. I appreciate you guys. Hope you found some value in this, whether it was just entertainment or the information or insights on it. If you did, and you know other people that are friends of yours in crypto, take a second, share this video out with them. Appreciate you guys, and I gotta head to the gym. Hopefully